Today, we're going to compare the economic system of the US and China. And we want to see how these two economic systems are fundamentally different. The US economic system is debt based, meaning individual needs to get loan for every aspect of their life, meaning the banks need to create debt, meaning someone in the world or some institution or governments need to lend those money to the US in order to the banks lend those money to individuals. An individual with borrowing money and accepting this debt for their education, for their cars, for their home, for their businesses, they could start building up something that may or may not could pay back in future. Let's go over one example. For example, an individual spent 200K on his or her education in a hope that in future 5 years, 10 years, could get a job that job could eventually be able to pay back his or her debt. And this is based on a hope to the future. So that's why we call the US economic system is fundamentally debt based. But the China economic system is saving based or deposit based, meaning that people usually for most of their expenses they spend the money they already gained. It's not something for the future. Why these two systems are so fundamentally different? The reason for that is in order for the US to keep dollar as the world reserve currency, the US needs to print or create more dollars than is needed, because those dollars need to go around the world and be used as world reserve currency for trade and transactions. In order to create this amount of money, the US doesn't need create money per se, but it needs to issue treasury bonds. It needs to create a situation that institution, government, and individual all around the world and also inside the US could lend money to the US. In this way, we have capital moving in and out of the US. Why this system working for the US and why not working for China? Because China has capital control, meaning the money cannot leave the country. Capital cannot freely leave the country. The reason for that is yuan, China's currency, is not world reserve currency. Yuan does not need to go around the world to be used as trade currency around the world. And if there is no capital control, what happens is what happened to certain countries in the past when there was financial shock. Countries like Thailand, like South Korea, like Argentina, Zimbabwe, this country that experienced quick outflow of their currency because they had no capital control. Why such a scenario would not happen to the US, and why the US don't have capital control because there is no other option in the world that those capitals can go, at least for now and at least for the last few decades. Because of the technologies, the stock market, treasury bond that perceived to be trustful and truthworthy. So, because of these things that happened during the last few decades, we see that uh, the US is not afraid to not have capital control because the US knows if any capital move out of the country, much more is going to come back to the US in one form or another. And this is the fundamental difference between these two economies. So, what are the consequences of a debt based system compared to a deposit based system? I'm going to go over certain core mechanism of economic growth. I'm going to go over certain key points that's very important. US growth is consumption based, China's growth is investment led. What does that mean? It means 75 to 80% of US economic activity GDP is based on consumption. Why is based on consumption? Because all this credit that is created by banks need to be spent in some way or another. Uh, why those money needs to be spent? Because the stock market, the companies that they need to gain investment from all around the world, they need to show that they are profitable. And the best way for those companies to become profitable, it means to people in the US have lots of credit, access to cheap credit to consume. And this consumption lead to the profitability of those companies and lead to the attraction of capital from around the world to the stock of those companies. Why China's growth is investment led? Because China fundamentally don't have this capability to borrow money from all around the world because Chinese yuan, not China, no country on earth has this capability. Uh, that's why China needs to uh, be based on investment, means bank create capital and those capital be loaned out to companies and company could invest in R&D and create value, and this value most likely stay in China because of capital control. So the people in China don't have access to cheap credit. That's why they cannot spend something that there is a hope of return in the future. That's why they need to uh, really save the money they have and spend as much as they have. But in the US is not the case. In the US, people for every aspect of their life they borrow money in the hope that those investment in home, investment in education may pay back in the future, may not pay back in the future. The second thing is financial system structure. US financial markets are credit market centric, China is bank centric. What does that mean? It means in the US, companies, in order to raise capital, they go public in New York Stock Exchange, or they go public, they become a public company. When they become a public company, and because people have access to lots of credit, they could invest in those company, and those company they can build upon what they have, that they improve and grow. So the majority or the primary source of stock, the companies that are in stock market, is based on the credit they receive from the stock market. But in China, companies get loan from bank in order to expand. There's a two different system. In US is based on the public companies based on credit received through stock market. In China, based on banks. The third one is household behavior and leverage. So in the US, consumption is often front loaded, as we talked about. Buy now, pay later. In China, consumption is backloaded. Save now, consume later. Although China also has a credit market, also people get loan. Is not like completely no loan and credit, no debt. Of course, they have debt too. The public debt they have, but is much, much, much smaller than the public debt that the US have, because two systems are different. Even culture are different. Chinese culture is more about saving, and the US culture is more about spending. So the fourth one is macroeconomic consequences. The US faces credit bubbles while China faces overinvestment risk. So what does that mean? We see the ghost cities, they call it ghost cities in China. We see real estate bubbles in China. So we see the bank fund those company, and those company go to sometimes go to extreme, that they build more than is needed. So that's why you have that type of bubble. You have like real estate bubble. But in US you have credit bubble, and all of a sudden all those leverages used by institution, by individual, those create a bubble, and when the bubble bursts, has domino effect that impact every aspect of economy. The fifth one is currency and global impact. The US model imports capital and export dollars. China export capital and imports demand. And we talk about this one too. You could understand what it says is. So the sixth one is policy levers and economic control. US policymakers influence the cost of borrowing. Chinese policymakers influence the volume and direction of lending. So, as you know, in a treasury market and Federal Reserve, they play with rates, with the interest rates. They raise the interest rate, they cut the interest rate, and this policymaker influence the cost of borrowing. The one reason in 2025 and recently in recent years and in future years, we're gonna see consistent, persistent, higher interest rate in the US. The reason is the US cannot cut interest rate because other countries are not willing to lend money to the US in lower interest rate, because now there are other competition that we talk about it in other videos, and we could expand in future videos. Chinese policymakers influence the volume and direction of lending. For example, if they want to improve one area, one industry, and one sector, they banks are more prone to lend money to those sectors. That's why we saw the renewable energy really skyrocketed based on investment that went through the renewable energy, and it saw so many companies came out of this arena because the policymakers wanted to that industry to bloom, and it did. Seven is strategic implications. So US model strengthens high financial innovation and liquidity. China model strong domestic saving buffers. So these are the two things that you need to keep in mind. And if we want to put it in a simple term at the end of this video, US runs on borrowed money, credit fuels growth, and external world finance US spending. And China runs on saved money, deposits fuel investment, China finances the world's borrowing. And this is the conclusion, the summary of this video that I read for you guys. So please write your comment, your ideas in the comment section. I really want to know what you think. And thank you for watching. Have a good one. Bye.